Swiggy's IPO is around the corner. Should you be applying for it? Food tech giant Swiggy's IPO is starting on November 6th and it is ending on November 8th, 2024. Swiggy launched its food delivery business in 2014 and in 2024 it has several business verticals. On the other hand, Zomato, the direct competitor to Swiggy, made its IPO debut in July 2021 with a share price of 72 to 76 rupees. It performed well after listing and it went up to the highs of 150 rupees, but later it got declined and reached almost 45 rupees. After the company announced its results, where they reported profits, the share price started to rally and now it is trading in the range of 240 rupees. But why are we talking about Zomato here? Because it is the only listed and comparable peer to Swiggy. Let's dive into details of Swiggy as a business and how it compares with the rival Zomato. And we'll also see who is going to win food delivery and quick commerce race. As per the DRHP report, Swiggy is planning to raise about 11,300 crores and the Swiggy IPO is a combination of fresh issue of shares worth 4,500 crore and an offer for sale OFS of 6,800 crore. Though the company's major portion of fundraising is going to OFS, almost 4,500 crores is going to fresh issue. So where does Swiggy use the public money that they'll raise? First, let's start with Swiggy's business overview. Swiggy is a new age consumer first technology company offering users an app for food delivery, quick commerce through their application called Swiggy. Their app can also be used to make restaurant reservations, which is dine out, for event bookings, stepping out, to avail product pickup or drop off services, Genie, and engage in other hyperlocal commerce activities, which is Swiggy Minis. Swiggy launched food delivery in 2014 and launched quick commerce in 2020. Swiggy and Zomato are almost identical in their business verticals, but the major difference lies in their apps. Swiggy has its own super app where all the services are combined, whereas Zomato is having separate app for the quick commerce, which is known as Blinkit. Coming to the Swiggy's current financial standing, the company's financial growth is exceptional. In FY22, they earned 5,704 crores. In FY23, they earned 8,246 crores, whereas in FY24, they earned about 11,247 crores. And the company spent 3,351 crores on these delivery and related charges in FY24 compared to 2,834 crores in FY23. But how does it compare to its competitor Zomato? First, let's look at the market share. Zomato is the market leader in the food delivery business. As per several reports, Zomato claims to have a market share of about 57%, while Swiggy is having 42 to 44%. Even in the quick commerce segment, Zomato-backed Blinkit is the market leader. But unlike the food delivery business, quick commerce is not having a duopoly. Blinkit has a market share of 39%, Swiggy's Instamart has a market share of 37%, and Zepto stands at 20%. An important thing that we need to remember is Zepto is giving tough competition to both Zomato and Swiggy. Now let's look at the key performance indicators for the food delivery business. If we look at the total orders for the food delivery business, as of March 2024, Swiggy got a whooping 577.74 million orders, whereas Zomato got 753.3 million orders. Moving to the second point, which is gross order value, which is also known as GOV. As of March 2024, Swiggy had around 2,47,174 million, whereas Zomato had 3,22,240 million. The most important metric, which is AOV. AOV stands for average order value. Swiggy had an AOV of around 436 rupees as per the recent quarter, whereas Zomato stands at 423 rupees. And coming to the MTU, MTU stands for monthly transacting users. Zomato's food delivery segment had 20.3 million MTUs at the end of Q1 FY25 as against Swiggy's 14 million MTUs. This difference of 31% had been consistent since FY23. Now coming to the quick commerce KPIs, total orders as of March 2024. Swiggy had a total of 175.46 million orders, whereas Blinkit has 203.4 million orders. Coming to the gross revenues in the quick commerce segment, Swiggy had 80,685 million, whereas Zomato-backed Blinkit had 1,24,690 million. And coming to the AOV in the quick commerce segment, it is very much important. Swiggy had an AOV of nearly 460 rupees per order as of March 2024, and later it increased to 487 rupees as per the recent quarter, whereas Zomato is having 613 rupees as of March 2024. In terms of contribution margins, as of March 2024, Swiggy had a margin of minus 6.01%, whereas Zomato had 2.13%. So these are a few important KPIs that will impact the overall performance of the company. The future financials of the company is dependent upon these metrics. And coming to the next point, which is Swiggy has reported losses for the last 3 consecutive years. In FY22, they reported a loss of 3,456 crores. In the next financial year, it even widened to 4,169 crore. But as of FY24, it reduced to 213 crore. If we observe the profit and loss statement of Swiggy, during FY23, the company spent around 2,500 crores on advertising and sales promotion, but it reduced to 850 crore in FY24. So why is Swiggy raising public capital now? As I mentioned earlier, Swiggy is raising 11,300 crores, out of which 4,500 crores is going to be a fresh issue. But where will they use all these proceedings? Well, we had gone through the Swiggy's DRHP filings, and here we found out all these details. Swiggy is proposing to the investment in Swiggy's material subsidiary Scootsie of about 137.4 crore to repay or prepayment of borrowings. And even they are proposing an amount of 982.4 crores for the expansion of Scootsie business. With that amount, they want to expand their dark store network for the quick commerce segment. And they are also planning to setting up dark stores, and they also want to make lease and license payment for their dark stores. Swiggy also mentioned that they are proposing about 423.3 crores for the investment in technology and cloud infrastructure. One main and important point is they are allocating nearly 900 plus crores for the brand marketing and brand publicity. So this will enhance their brand visibility across all their segments. Moreover, they are also planning to fund inorganic growth through unidentified acquisitions and general corporate purposes. Only time will tell if Swiggy's plan to spend extra capital in marketing and advertising prove to be fatal or fuel for the company. So now let's talk about the growth triggers of the company. First one, focus on Scootsie. Scootsie offers comprehensive supply chain services to wholesalers and retailers. By leveraging their warehousing capabilities, they streamline the value chain to provide reliable, fast and cost-effective order fulfillment for both wholesalers and retailers. Their supply chain solutions to wholesale and retail partners encompasses warehouse management to streamline operations, in-warehouse processing that includes value-added services to enhance product delivery and efficient order fulfillment, which enables order picking, packaging and shipping processes for the retailers and wholesalers. As of June 30, 2024, Scootsie managed 2.66 million square feet of warehousing space across 13 cities, had approximately 680 authorized brand distribution partnerships, and served approximately 87,000 retailers and wholesalers. The company is proposing to allocate extra funds to Scootsie business so that it will boost and create a significant impact on the Swiggy's business. Moving to the second growth trigger, which is quick commerce segment. The quick commerce segment is growing rapidly, and even Swiggy is having major market share. And moreover, their average order value and gross order value are competitive and comparatively better. As of June 30, 2024, Instamart operated a large network of 557 active dark stores across 32 cities in India, and as of September 10, 2024, Instamart operated a network of 605 dark stores across 43 cities in India. So, this segment can be a growth trigger for the company. Coming to the IPO details, the IPO is starting on November 6th and it is going to end on November 8, 2024. And the overall issue size is of about 11,300 crores, out of which 4,500 crores is going to be fresh issue, and the remaining 6,800 crores is going to be OFS, which stands for offer for sale. And even the price range of each share is going to be 371 to 390 rupees, and the company is going to list on November 13, 2024. So that's all about the Swiggy's IPO and its overall details. As always, we recommend that you conduct your due diligence or feel free to contact Savart to know more about investing in this particular IPO. We have observed that most IPOs do not pass APART's test because of overvaluation and other major concerns. It must be remembered that most of the founders and even promoters would want top dollar price for the company in the market, and including for the exiting investors, and they don't care about retail investors, and wealth creation for the retail investors is not that priority. There have been very few instances where the companies have been listed for fair pricing and they have created wealth in the near future. In a market where worthless businesses are being dumped down to retail investors, it is our duty to treat with caution and make investment decisions accordingly.